Hi everyone, myself Prithvi. Today welcome you all for my YouTube channel. In this video I would like to discuss about another fundamental analysis stock which is doing a business in a road construction space. The company is known as HG Infra Engineering. So why I have taken HG Infra for my fundamental analysis is mainly because HG Infra is a company which is in the road construction space where the current financial year budget where Nirmala Sitharaman has announced in February, which has told that the more is been spending on the infrastructure side, infrastructure boost is going to be huge. So because of that reason, there is a infrastructure improvement is going to happen very rapidly in the next 2 year, 3 year and 5 year. Because of that reason, these companies will be impacted positively on the revenue and profit of the company. Because of that, I have taken this company for my fundamental analysis in today's session. So firstly, the company is in the business of road construction space. The company has came up with an IPO in 2007 with an issue price of 270 rupees, but still the company is trading at 340 rupees. Recently, in the last 3-4 trading sessions, the company has jumped its stock price almost 15 to 20%. That one is a notable point. So the company is mainly in the business of engineering procurement, construction of bridges and roads and maintenance of that. So the current order book of this company is at Rajasthan, Maharashtra, Haryana, Telangana, Uttar Pradesh and Andhra Pradesh. Almost it is having a project in 6 states. So the current order book where in Rajasthan they have 10 projects, in Maharashtra they have 7 projects, in Haryana they have 4 projects, in Telangana they have 3 projects, in Uttar Pradesh and Andhra Pradesh they have one project. So it is the time to look at how the order book status looks like. So currently the first 4 project which you are seeing, it's almost in the completable zone of 12 to 82%. Other 4 projects are not yet started and other project status has not yet published in the company financial statement and investor presentation. Because of that, I have not gotten data on that. So when you come to the order book status, current year order book is at 5,975 crores. Almost when you compare to the FY21 revenue, it is thrice. Still the company has a potential to do business next 3 years. That order book is there because of the next order pipeline is more, because of the infrastructure spending is going to be more by the government. It's going to boost their revenue and profitability and order inflow in the future. So one important thing which I want to tell you is that the order book is also growing at 15.2% CAGR. That is one of the very good important point with respect to the company future growth outlook. So next important point about the business is that the infrastructure road companies will be having a huge debt because of the working capital requirement is more. So I want to give you an example. To construct a 12 kilometers of the road, it requires almost 600 crores. Just imagine if they want to construct 50 kilometers of road, they want almost 2,500 crores of net amount is required to construct that road. So who is going to fund that? So the banks will be funding that. Because of that, the debt of the companies will be increasing. It's important to for an investor perspective that if the debt is less, the interest payable is less. If the interest is paying is less, automatically the revenue which has been generated and minus the expense, the profitability will be increased because the interest will be stagnant. Even if the revenue is generated or not, the interest will be stagnant. So that it's important to know, it's important when you are analyzing any kind of a company, the debt should be less so that you can increase the profit of the company in the future. So that one very important thing. When you compare to the HG Infra company is having a debt to equity ratio of 0.6. Very important thing. So when you compare with the other road construction space companies, so the KNR construction which is having a debt to equity of 0.5. Next is the PNC Infra which is having a debt to equity of 1.3. Next is the Dilip Buildcon which is having a debt to equity of 2.7. Next is Sadbhav Engineering which is having a debt to equity of 4.3. And next is Ashok Buildcon which is having a debt to equity of 12.5. IRB Infra, the debt to equity of 2.4. So when you compare all this company with the HG Infra company, you can able to clearly identify which company is having a less debt to equity ratio. It's a good company. So when you are analyzing a debt to equity part, if the company's debt is less than 2, debt to equity ratio is less than 2, it is a very good. If it is more than 2, that is one of the cautious thing for an investor to invest in those companies. So when this kind of a data is in front of you, which companies you will going to choose, it's left to you. My perspective is that if the debt to equity is less, so that I'll choose that company. So this is all about the business analysis. Next, let us look at the government initiativeness which has been taken in the FY22 budget. So when you come to the government initiativeness, so in the year of April 19 to February 2020, almost government has awarded 8,500 kilometers of roads construction in this period. So when you compare with the previous corresponding year, government was awarded 4,775 kilometers of road highways. When you compare that, the spending has been doubled. So in the next year also, in the FY22, the government has aimed to retain these levels for the next year also. That's one of the very good things. So under the Bharatmala Yojana, the government is planning to construct 65,000 kilometers of roads in the next coming years. In the first phase, the National Highway Authority of India has been planning to construct 34,800 kilometers of roads by the end of FY23. In the second phase, it is already planning by NHAI. It will be coming as soon as possible. So the one important thing which you have to know is that the government spending is almost 20 lakh crore. In that, 18% of the total spending is been spent on the road construction itself. It has been allocated in the budget, which you can see in nowhere in other budget have been allocated this much fund to the road construction space, which is very good for the infrastructure companies which is there in the road space. So the one important point by the government is that the RBI has cut the repo rates. Because of that, this road infrastructure companies is getting the loans at the less interest rates, so that if the interest rates remains low for the more years, definitely these companies will be taking a loan which are lesser rates, so that they can operate multiple projects at a time with a lot of funding by the bank. So that one very important thing by the government initiativeness, and also the present outlook of the scenarios when compared to the financials of India. So this is all about the government initiativeness which has been taken. Next, let us look at how the company has been started and how the company stands now. So the company has started in the 2003 in the Jodhpur in the Rajasthan by the partnership with MS Odal and Giriraj. So firstly, they were doing PWD work in the first starting of the years. Nextly, in the phase 1 of 2008 to 2012, the company worked as a PWD subcontractor and civil constructions, so in the one experienced state. So next, in the phase 2 from 2013 to 2017, the company worked as a subprime contractor for the NHAI for building the express highways and all, with operating in 6 major states. In the phase 3 from 2018 to 2021, so the company was a leading contractor of the road. Next, they were operating in the 8 states. They were having a pan-India presence. That one very good point. So in this period of the company which has been doing a PWD work in one state to become a pan-India presence, it's a long way to go. So in that period, the debt which plays a very important role. So the debt which they have controlled very well. So the cash flow management of this company is very good, because if they want to grow to this extent, they want to take a loan, they want to borrow the money. So how they will go to manage, that is important thing. So when you compare, when the company has started, the debt to equity is at 1.75, it has reduced to 0.28. So as you can see, it is visible in the cash flow and the debt to equity statement itself, how the company is managing the cash flows. So which is very important thing. So this is all about the story of the company. Next, let us look at on the shareholding pattern of the company. So when you come to the shareholding pattern, the promoter is holding 74.53%, the FIS is holding 0.12%, and the DIS is holding 18.19%, and the public is holding 7.16%. So one important thing which I found out in the shareholding pattern analysis when I was doing, so the promoter recently in the March, so they have occupied almost 0.49% stake in the company. They have bought their shares in the secondary market with a price band of 267 to 282 rupees, which is one of the very important thing. For if the promoter is buying in the company, increasing the stakes, means they are focusing a good future outlook for the company in the next future. So next important thing is that the mutual fund holdings in the company. So the big mutual fund companies which you can see in the left side of the screen, where they are holding huge quantity in this company, huge stake in the company, because confidence on the company that they can execute many orders, they can improve their financial in the next coming years also, they can grow very well. Because of that reason, so the mutual fund companies is also holding more in this company. So this is all about the shareholding pattern. So next, let us look at the financials of the company. So when you come to the financial analysis, I will take you to the quarterly analysis first from this year, from June to March. So where you can see in the June 2020, so the revenues have dropped because of the lockdown and all. So after that, from the September onwards, the revenue started increasing. So in the December and in the March also, they have seen a record sales which they have not seen in lifetime at all. And the profit also, here you can see, it is not seen in the lifetime ever of their financials itself. It's one of the very good point. So that operating margin, where you can see the operating margin is also stable. So they are operating higher than the previous financial years. So that is one of the very good things for the investor perspective. So next, let us look at on the annual statement. So annual statement also, the company has come up with IPO in March 2007. Since from then, the sales was 1000 crores. It has directly increased to 2600 crores by the time span of 4 years. The profit also increased by 53 crores to 237 crores. So the earning per share from 29.64 rupees to 36.31 rupees. Very good thing about the company is growing at a very good pace. So next is coming to the balance sheet. I will only tell you the borrowings because the debt of the company. So the borrowings is steadily increasing from 2017 to 2021 from 200 crores to 690 crores. So it is at controllable range. It is not going higher because the debt to equity ratio is 0.6. So very good. As you can see, the financial statement, the revenues is growing at 22% CAGR. Next, the margins, when you compare to the previous year from 14.9% to it has increased to 16.2%, which is one of the very good thing. So overall, the financial statement is very good. The balance sheet is also very good. So next, in the future also, we can expect they will going to repeat these numbers in the future with a growth outlook of double-digit growth in the next years. So by this, I am ending this video with a very quotable note of conclusion about this company is that this company is going to be giving 30 to 40% return in the next 1 to 2 years. This is definitely a very good pick at the current level because of the infrastructure boost is happening in India. So this is all about my analysis. Please do your analysis, consult your financial planner and financial advisor before making any kind of a decision on to invest in this company or not. So by this, I am ending this video. In the next videos and all, I'll be coming up with the fundamental analysis of very good companies. Stay tuned, watch the videos. Till next video, bye bye.